A very common question that I get is, how do I use trailing stops? People hear about trailing stops on television, they hear about it from their friends, and they don't really understand what it means. What you're basically doing is, as a stock price, let's say you buy a stock, this example I'm going to say shorting. Let's say you're shorting a stock and you pay $100 for it, and you want to put in a 1% trailing stop. So what does that mean? That means that if from $100, let's say you short it right away, and the stock price goes to, I'm just going to say 101, you are going to exit the position. The computer's going to do it for you. Now, let's say that this thing drops to $90, okay? You've made $10 per share, and you haven't had any rebound of 1% in that time frame. Let's say it gets to 90, and all of a sudden, you get a rebound in stock price, and the stock price goes back up 1%. You are going to automatically sell your shares at 1% higher than $90. So this is just a way for you to minimize risk, but it's also a way for you to get stopped out. And that is when you exit the position at 90, all of a sudden it drops to 85, you're a little bit upset with yourself. So there's different methods to doing this. This is AMD, for example. It's come down, and typically when you use trailing stops, you're going to be doing it from a swing trading perspective or a daily perspective, not so much long term. So let's say that this stock price is just coming down and you have made a killing. You're getting amazing selling volume coming in. You're coming down through the sweet spot with a lot of power, really good candlesticks coming through. Let's say that tomorrow, actually, let's just say that today, this thing rebounds in price, and we are sitting at 86.07 right now. Let's say that this goes back up to $90 today, and you had a trailing stop in there of 1%. Your shares are going to execute. You're going to get rid of your position. Now, the risk you take is the opportunity that you could have gained. Let's say tomorrow you get an engulfing candlestick down, something like this. You're not in the stock. I personally do not like to use trailing stops when it comes to swing trading, and it's because I would rather trust my trend. I would rather look at this and say, trend is down overall. I'm going to stick with this. I don't really care about the price action that happens day to day. It's a little bit more important if you're trading a stock like a Housel, a Neo, something with a lot of hype. That's when you're going to want to use trailing stops because they're probably going to bail you out more times than not. If you want to learn more about taking profits, I made a video. It's right here. Go and watch it. Catch you on the flippity flop.